With it being back to school and that being our focus this month, Clinton, you doing something a little bit unique for this show, and you're taking it on the road, so to speak, and heading out to the waterfront.
I know. Our producers and I, we hit the waterfront here just a couple weeks ago, and we were talking to people and asking them about home ownership. Let me tell you, as soon as people see a camera and they see a mic, they want to talk to you.
Right.
We kind of joked about doing it at the radio station, but you never know who you might get on. But you guys let a lot of people on the air anyway.
Well, it's good to hear from a variety of people.
Correct.
But that's really, I think, how you get the pulse of what's going on in the community is taking it to the street and talking to people who may be in the market or are back to school and or have all of these questions that we've been talking about this edition.
100%. So you know what? I think we're going to queue one up and let's find out what our people want to hear.
What's happening with rates, Clinton?
What is happening with rates?
The question of the day.
The question is really, really wild. I think rates are on the downward trend. Again, we mentioned earlier, I had a call with a senior economist from the Bank of Montreal. We actually did a call for our business partners.
Right.
And our team. We had about 80 people or so sign up for this call. It was amazing just hearing from someone that's outside of our normal network. And they're projecting that the Bank of Canada will lower the key overnight rate by 75 basis points between now and early next year. So that's cool. Fixed rates have really plateaued. There are some lenders that are offering some quick close specials, 369, 399. Now, we haven't seen a lot of rates in the threes lately. Majority customers are getting rates in the low fours. But just depending on what your situation is, maybe it could be better. That was awesome.
So 325s or a 50 and a 25, or how do you think it's going to roll out?
25, 25, 25.
All right, so 325s.
I think. That is my projection. Again, let's see what happens next week. We'll be reporting live on, City News.
That station.
With that station, and we know that station. Should we hear the next one?
Sure.
Why are rates so high all the time?
Oh my goodness, these people with the rates. Why are they so high? One was really inflation.
Right.
Tiff Macklem, Governor of the Bank of Canada. He said the rates were going to stay low for a long, long time. That was incorrect. Inflation became a runaway train. So obviously the Bank of Canada increased the key overnight rate.
So the theory is, and correct me if I'm wrong, the theory with the bank rates rising is that they want to limit access to money so that people aren't spending as much, correct? So the theory works that if you raise interest rates, then less people will be spending as much money.
Correct.
And that will lower the inflation rate.
And it did. It worked. So inflation right now is below 3%, which is the target. But if you take out the carbon tax, inflation is probably still above 3.
Right.
So that's where I was on the fence about a cut for this September from the Bank of Canada. But as soon as I saw those job numbers come out, I'm like, we are locked and loaded here with a 25 basis points cut. A lot can change, though, between now and next week, Dan.
What does
Trump could decide something, and that cut's off the table.
What does a 25% drop mean to the average homeowner?
It won't be a 25%, but it'll be 25 basis points. 25
basis points, so like a 0.25%.
Yeah, it really depends on, what your amortization is, on what your payment is. Overall, it won't be a huge dollar amount, but sometimes it's just those optics, and any savings for a consumer right now is great. And really, everyone's stretched.
And if your prediction is correct and we see a 75 basis point drop, that's a significant savings in interest for people, particularly on the variable mortgage.
Oh, 100%. That means that majority of consumers will have mortgage rates in those 3% range. And we haven't seen mortgages, in the threes. It's been 2 years. So I think it'll be a very welcome, news for consumers. But on the flip side of the coin, for those looking to get into the housing industry, or not even housing industry, housing market, it is going to increase that demand because I think more people that have been sitting on the sidelines are going to start looking at buying homes.
These are great questions.
They are great. Hit us with your next one.
Variable or fixed?
Okay, a lot of rate questions out here.
Variable or fixed? That is that's an. I think and I mean you're the expert, obviously, but that would depend on your situation, correct?
100% depend. And historically, consumers were getting a 5-year fix, and that is not the trend right now. I would say the trend is people are going to the variable rates. They know rate cuts are coming. That is just reality. That's the consumers feel it and they know it. And the media is talking about it. I would say also 3-year fix, very, very popular. So it's really between a variable rate mortgage product and a 3-year fixed. And I think the consumers that are taking a 5-year are much more conservative. But
It's all about your gut, right? Like what your gut can stand. I mean, if
you're going to lose sleep at night,
right,
and you want that security and you're okay to pay some more, Dan, take a 5-year fixed. That might not be my advice, but I want to do what's right for the consumer. So if you tell me I've always done a 5-year fix, I need to do a 5-year fix, I don't care if I'm going to pay more, I will take the direction from the consumer, but I want to educate them and say, hey, here's what's going on in the marketplace, and here's why you should do this, and here's why you should do that. I do believe the variable will be cheaper. Historically, even if you look over the last 50 years, a variable rate mortgage has been less expensive than a fixed.
Even when we saw those increases because
Correct.
of inflation. Clinton, we were talking about rates when those inflation numbers were high, and people were renewing their mortgages for 1 year, for 2 years, just to
Very
avoid.
short.
So obviously you're back to recommending that they go as long as they can, 5 years or whatever.
I would say 3 years, very popular. Variable, very popular. I would say less popular is the 5-year fixed, although pre-pandemic, about 60% of clients were taking
Really? That many?
Yeah, 60% of clients were taking a 5-year fixed. And that's very historic that they will take that number. For us, a higher percentage of our customers are taking variable because they have me. They have the knowledge. They have me on City News. They have me on Facebook. They have emails and they have SMS. But not every consumer has us. So I think the more conservative consumers were taking a fixed rate, and the most popular fixed rate would be a 5-year.
And that's what people tell me that are in the mortgage world, that they want to know what their payment's going to be for the next 5 years so that they can budget around that, right? And that's what the fixed rate gives you.
It gives you the budgeting, it gives you security, and it gives you payment certainty. But that doesn't necessarily mean that is going to be the best for people, and that doesn't necessarily mean that that's going to be the most affordable over that term. Me personally, I have a higher tolerance for risk. I'm in a variable. I believe my variable will be cheaper over the long run. Am I paying more today than if I was in a fixed? Yes. But let me tell you, once we have a 75 basis point, cut, by early next year, I'm going to be very happy that I was in that variable rate. I can tell you that.
Be all in the cash.
I'll be like, ooh, I'm making some bucks here. Let me get this mortgage paid down. Hit me with your next question.
Why is my house worth $2 million when I'm just a regular middle-class person?
You know what? I think that's a good one, too. I actually talked to this one a little bit longer, and I'm like, you tell me about your $2 million home, honey. And she had bought this property. We're talking like 10, 15, 20 years ago. I can't remember how long ago, but it was a long time. She bought it. She said it was at the top of her affordability at that time. And she'd bought it with her spouse. And then the property value doubled. And then the property value doubled again. And she was at the right place at the right time. And she's like, I'm not a wealthy person, and I would never be able to afford to buy this home again. But she really became a millionaire by buying real estate and holding on to it.
It's like, that's the dream situation, right? That you buy low and sell high. That's basic economics.
Yeah, and she made some good decisions with her money, and
right.
we talked a little bit more about it, and she doesn't have a mortgage now, but when she did buy this property, and I think it was over 10 years ago, she paid about $500,000 for it. And now today it's worth $2 million. But we hear those stories all the time.
I was just going to say, you hear that a lot, right? People that have been in the market for a while that are...
You're buying a place in the South End, you're buying a place in Bedford. Right. Like, people have doubled, tripled, quadrupled their property values in the last 20 years.
And over the last 5 years, particularly with all the crazy that was going on during the pandemic.
Definitely. I think the people that bought 2019, even 2020, have pretty much doubled their property values. So double in 5 years is pretty significant.
That's a pretty good return.
Definitely. What's the next question?
How can you have a 1% down home or 5% and all of that? I believe if I'm correct, you need to put insurance or something like that. And the insurance rates are ridiculous.
That's a great one. So the minimum down payment in Canada is 5% down. So, our person on the street, they definitely knew they got there at the 5%. The cost of insurance is a one-time hit, and the minimum amount for the insurance, if you amortize over 25 years, is 4%. So you put down 5%, you then have to do 4% insurance on your mortgage. You really have somewhere around 1% equity left in your home. Yes, that cost of insurance may be a lot, But the reason that the Canadian Mortgage and Housing Corporation exists, CMHC, Sagen, and Canada Guarantee, the reason that these three insurers exist is to make home ownership available to more people. High ratio mortgage insurance only started around 1980. So it's only been about 45 years that people have been able to put down less than 25%.
So that's the number, 25% before you're...
Used to be. Now it's 20% down you need to do to get a conventional mortgage. Back then it used to be about 25%. Then the high ratio insurance came in because we wanted to make home ownership more available to a wider range. Could you imagine if you're a first-time home buyer and even have to put down 20% to get into the marketplace?
Most people can't put 5%.
No, that would be very restrictive.
Right.
In Nova Scotia, though, we do have a down payment assistance program.
Right. And
not every province has this. And obviously, there's some income requirements, and you have to have a pre-approval. But if you're buying something at middle range of the price point, I think in Halifax it might be $500,000 or $600,000 as the top of the range. You can apply for the Nova Scotia Down Payment Assistance Program if you've never owned a home before.
And the government kicks in some of that money.
Yeah, they give it to you at an interest-free loan, and you have to pay it over 10 years.
So that gives you a chance to get into these markets that we've been talking about throughout this whole episode about how expensive it is for a first-time buyer to get in.
Right. So if you have good income and you have good credit, but you don't have the down payment, maybe the down payment assistance program could work for you. We have a couple of minutes left, so I think we might have time for one more question.
I would like to know what can happen in the case of an inevitable crash. Let's be honest. Condos are dropping. Homes are dropping. What's going to happen when houses actually collapse if you're stuck holding the bag?
This sounds like a student coming from Ontario.
Right.
What do you think, Dan?
Tough question, because it is happening out west, but it's, as we said earlier, it's not happening here, at least not yet.
It certainly hasn't happened here, and we've had actually price growth where Ontario, in some areas it's been like 25% less.
I can't imagine being in a property, if it's a condo or whatever, and then all of a sudden the market dropping 25%. That would be frightening.
It's alarming. And you know what? Sometimes you just have to ride it out. There's no magic solution here, but if you do have high ratio insurance and you're having financial challenges, we'll say, the insurer is going to try to work with you to keep you in that property. If you have a true conventional mortgage, like you're putting down 20% or more, it's really between you and the bank, you sorting this out. But sometimes you just have to hold on. You might have to rent it. You might have to sell it and take a loss. But, the worst case scenario is the bank is going to take this back from you. And nobody wants that.
Right.
I don't want that. The consumer doesn't want this. The lender doesn't want this. But I can tell you there's probably some people in Toronto that are giving their condos back to the bank. I think that's going to happen. And I think it has happened. But we haven't had the losses here that the Canadian Bankers Association thought we were going to have. People are paying their mortgages on time.
Which we thought was going to be a big problem after the pandemic when those mortgages were so inflated. And then we thought, okay, once the renewals come in and we're into
that
these
cliff,
higher.
That
right,
cliff.
And that people weren't going to be able to afford their mortgage payment.
It hasn't happened. Canadians are very resilient people, and they're going to pay their mortgage payment probably before they're paying, their credit card or their line of credit. And, anybody even with damaged credit, they're getting a car loan. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.